Sometimes the graphs are in focus and sometimes they're not. I see you, Andrew. I will get somebody working on that hopefully here over the next couple of days, and we'll try to get that nailed down. I've heard that a bit from everyone. Good morning. Thursday, the 30th of April. We're closing down the month here. We'll see what kind of a note it's on. If the futures tell us what it's going to be a weak one. We saw a fireworks display last night with earnings. We got an employment number or unemployment number this morning that's going to help to drive stocks. We're heading into a week of earnings, week, of earnings. So I'm starting to wonder about this market. I'm going to get all of this in the slideshow for you. I'm going to take some of your questions as well. We're going to talk about how you play Twitter. Twitter, I don't know if you saw, up 6 to 8%. Now it's down 2%. Microsoft, we're also going to discuss that, and maybe a little bit of Facebook here. Let's jump into the charts, though. Let me take you over to the screen real quickly, and give me 2 seconds here just to get things organized. I had to do things a little bit on the fly this morning, and as you can tell, we're in a different area of the house. The coronavirus lockdown studios here. We're actually up in my what I call my trading den. So hopefully you guys enjoy a little change of scenery. Still not getting outside. It's rainy and just nasty outside. But I hope that, like I said, we've got some charts here. I run my speed check every day right before I get online and kind of shooting everything out, closing things down. So I don't think we're running into too many bandwidth issues. But I'm not a tech genius. So this morning's trade rundown. Weekly unemployment claim numbers came in about 15, 20 minutes ago. They fell a little bit right within the expectations. We'll talk about that. Not really a market mover right now. Crude oil is up another 11% when you look at the Dow. At the futures that are trading. Correct that for you because we're down about 174 now. We had been down about 100 points on the Dow right before that unemployment claims came in. So now we're seeing a little more reaction, a little bit of play through. I think this was set up from last night, though. Last night's earnings fireworks show was amazing. When you looked at Microsoft, when you looked at Facebook really knocked the cover off the ball. Tesla knocked the cover off the ball. And then Elon Musk, as he always does, he gave a little bit of, he gave people to talk about during his conference call and his comments and thoughts about the lockdown. We're going to talk about the simple price strategy, and you've heard this from me before, but it's time to employ it. Using limit prices, folks. Don't buy blindly into this market right now. Positioning yourself ahead of the weekend. What I'm talking about is next week's pretty boring for earnings. I'll show you a breakdown of the sectors and then 5 minutes to chart the market with you. I want to hear what you want to talk about, your questions, your answers, etc. about the what's going to happen over the next couple weeks. As I mentioned about 15 minutes ago, weekly jobless claims, 3.8 million. The expectations were about for a little over 3 million. And that was the consensus out on the street. The prior week was revised from 4.44 to 4.427. I think we're picking nits at this point when we're going out 3 decimal points to the right of the decimal there. So March personal spending also dropped 7.5%, and that's against a 3.6% backdrop. We've seen GDP now that's been coming down. The prior on the personal spending was 0.2, so a positive 0.2. Right now, we're starting to see something that I think that was hit last night very well in or yesterday rather with Secretary Powell. And that was a question from a reporter where they said there's a disconnect between the markets and the economic or the corporate outlook right now that's out there. Can you explain what it is? And the Fed came back, the Fed Chairman Powell came back and said, well, it's because we haven't even begun to tap the Fed's resources. So in other words, we've got a whole lot of money that we're sitting on that we're ready to go out and start buying everything that we can to help prop the market up. Takes me back to my oldest saying that I've been sharing with you here over the last 3 months or so, which is it's really hard to be bull on quantitative easing alone. And that is absolutely true. The Fed at some point was going to have to let things go a little bit and let the market reset itself. But That's what we've got on the jobless claims. It punched futures down by about 70 points. But this is the big surprise. With futures down as much as they are right now, last night we had an absolute fireworks show after hours. Microsoft came out. They looked good. Facebook looked great. Tesla, holy moly, Tesla knocked the cover off the ball yet again. This should put the NASDAQ composite on track to erase the losses for the year. In other words, we should see this be one of those, they just put a lot of gas into the tank and the composite should really take off. Instead, right now, we're seeing the S&P 500 trading lower. NASDAQ 100 is trading 0.4% higher. The Dow's 200 points, 225 points, 50 points lower than it was just a few moments ago. So, in other words, these companies really fired off their guns. And I think everybody was expecting some good reports. I was certainly expecting something good from Microsoft because their service has been doing great. Facebook expected to see something positive as well. And then expected something from Tesla. Nothing as dynamic as what they handed us. So remember, Apple and Amazon, Twitter came out this morning, but Apple, Amazon are later this evening. Those are going to kind of be the cherry on the top for this NASDAQ Sunday. And at the same time, this gets it all out of the way in terms of the big sexy companies. There are some of them that are going to be out there that we're going to watch. But my point in telling you this is that we've kind of gotten through this stretch. The second week of earnings. First week is financial. Second week is the shiny object week. That's when we get those numbers from Google, from Amazon, from Microsoft, from these companies that everybody sees at the top of the list whenever they turn on the financial news, whenever they read an article in the Wall Street Journal or even the New York Times. These are the companies that have been doing all the work to get us out of that March 23rd bottom. So it's going to be important to watch how the market reacts over the next couple of days. And is this going to be kind of a, okay, the party's over, let's just walk away? Or is it going to be a rally call for investors to continue plugging money into the market? My guess is from the technicals out there, and strictly on the technicals, you know that I like to follow the technicals. We're getting closer to a point where at least people are going to leave and maybe go to another party for a little while, maybe the bond market for a little while, because over 70% of the S&P 500 is now hold on a second. I just saw that, JM. I think that right now we could actually see, a little bit of softness in what we've expected to be a rally that's going to continue to push us higher, simply because more than 70% of the stocks in the S&P 500 have now reached an overbought reading. So in other words, they have stretched the rubber band a little too far, and it's time for it to pull back a little bit to reality. We'll see what happens, but watch for Amazon and Apple this evening. I think Apple's going to give you some problems in terms of the numbers. They've obviously got some hardware problems that they're trying to figure out. They've got new phones that they're trying to figure out. The services side is going to be very strong because everybody has been locked up and they've been trying to go out and do something besides just sit and look at the wall or paint their walls with paint from Home Depot. Yes, Andrew, I am always watching. Always watching. You too, JM. So anyhow, that's a joke when I say that. Tesla, let's take a look at this. 8% higher and heading towards that double top. If you're trading Tesla, if you've been asking about trading Tesla, if you want to, if you're holding it right now or you've been looking to buy it, here's the play on it. Play it up to the 900, 950 maybe. This is going to be a double top right now. The 50 days flat, it's been tempering off just a little bit here. 20 days shooting up, a lot of consolidation here. Tesla is notorious for seeing those bumps and then the pullbacks. Bumps and the pullbacks. Bumps and the pullbacks. Got a bump there and a pullback. Watch the 850 level. I think we'll plow right through that, though. 900 is going to be the range where you want to start looking at taking a short position or at least putting a stop loss underneath your position so that if it pulls back down again, and it will. The other way that you look at this, the bullish view, is if I like Amazon, what should I buy it at? Here's where we start talking about limit orders. Put a limit order in at $800. It's going to go above that today. It'll continue to go above. It should start to trade up towards that 900 level. And then eventually we'll see it pull back just because it's got into that overbought territory. Don't buy the stock today at the market. Put a limit order in like we did on Zoom and sit around and wait for Tesla to come back to you. That's how you trade Tesla after they beat earnings, and the stock is going to gap higher. What to take away from these earnings reports? Well, technology services, the companies are really knocking the cover off the ball here. 4.5%, they're rallying immediately after earnings. So your companies like Microsoft, like your Checkpoint Securities, like your anything, even Twitter, Google, they're taking off as long as they're technology and services. Hardware companies are going to be a little bit different with your semiconductors and your box and all of these, because we're not seeing that actual demand for those products coming through right now. As a matter of fact, Semiconductor Alliance said they were expecting the semiconductor demand to slow because of production with cars, et cetera, et cetera. So stick with technology services. Are seeing an average of 4.5% rallies immediately after their earnings announcement. That is also fortifying the NASDAQ 100 stocks that are in place to be the bulls in this rally. So in other words, the NASDAQ 100 right now is made up of a lot of these names: Google, Microsoft, Amazon, etc. That is why you're seeing the NASDAQ 100 be the leader in this particular market, because those technology services are key, and they're the most heavily weighted companies right now. If you look at even weighted versus market cap weighted, we're still seeing a lagging behind those even weighted indices, whether it's the S&P 500 or the NASDAQ. So that tells you need to stick with these leaders right now. Don't try to buy the dogs of the whatever, the dogs of the Dow, the dogs of the S&P, because right now those dogs are going to stay asleep for a reason. There aren't in the businesses that are going to be benefited over the next 6 months or so. So this week was Wednesday and Thursday were the sweet spot for the NASDAQ 100 indice, with all of the announcements that we have seen here over the last 2 days, and those that we'll see at the close today. That tells you something. That tells you need to be looking forward to next week, which is what I've done. Right now, I'm looking at this from a perspective of what's coming up around the corner. And beginning next week, May 4th, insurance is at the top of your list for companies that are announcing in terms of percentage of the ETF. Pharmaceuticals after that. Real estate investment funds. So your real estate, your REITs, your materials company, utilities company. These are all sectors. We get to one that's sexy down there, biotech. But these are sectors that have been asleep. They've been pulled up along with the rally. They're the boats that have got, I don't want to say holes in them, but they're the much slower moving boats. And quite frankly, it's going to take a little bit of flash away from the earnings season. And when I see the Russell 2000 breaking above its 200-day moving average and then putting in a 5% move yesterday, that's telling me that all of a sudden you've got people that are running into this market and trying to get into the FOMO market. They really are afraid of missing out on this. And that, of course, brings in one of those scenarios where you look at stocks and say, hey, we've got a situation where we could have a problem. I wanted to bring up actually one of my, because in my grand scheme of things, we got very defensive when we were looking at a lot of the positions here. Let me pull this up for you because I wanted to show you this. This is an interesting way to look at this. This is my commentary last night that went out to my Night Trader subscribers. And it's basically, this chart keeps me awake at night. And I'm going to try to blow this up so that you can see it. And I know that it gets grainy, but this is the chart of the S&P 500 in 2008. And in the first 2007 to 2008, in that first dip lower, we pulled back around 20% or so. Then we went up 13%. Then we came down 15%. Then we went up 6%. Then we went down 41%. Then we went up 26%. And we went down another 27%. My point in showing you this, in at least the fuzzy version of it, is that this market right now has made that first move down. We've made the second move up. It appears as though if we watch this very carefully over the next week, and this is where you need to be very cautious, just when it's feeling like it's time to go bullish. And I've been adding calls to the portfolio, and I took puts off that hurt because I had to close out losers. But just at that point where you start to add those, and we're seeing these breaks above the 50-day, we're also starting to reach up to some overbought readings on the RSIs, more than 70% of the S&P. Now we've got a catalyst that's going to come in that's not as much of a catalyst as it was this past week. I'm telling you that we just need to watch our roll as we head into the weekend because the earnings next week aren't going to be as flashy and as attractive to the rest of the market. So what happens next week? Well, this is the downside of the earnings season. We get through the first 2 weeks, financials warm everything up, get everybody ready. They're the opening band for the concert. And then you get the headlines out there, your Amazons and your Googles and Intels and all of these companies that really came out and did their job. They got the crowd whipped into a frenzy. Financials are often the sector that kick off the reversion. What happens is historically after that 2 weeks, the opening band and then the actual headline act, you've got a seasonality effect, call it, where the earnings buzz drops off. And there's great studies that have been done on this when you look at the second and third week of earnings and how they typically start to nail down a top in the market, or at least an earnings top in the market. Financials are often the sector to kick off the reversion, so they're the ones that start to pull up. And financials, if you haven't been watching, are the ones that were struggling through all of last week. And this week, all of a sudden, the spurs hit them in the side and they took off. And Bank of America moved up above its 50-day moving average. And the XLF did the same thing, and the KRE did as well. So they exploded this week. And most of those have turned into overbought situations. So what I'm saying, and I am not a perma bull. I like owning stocks. I like buying calls. I have calls. I have stocks in my account. But from the perspective of an overall portfolio, it's now a little more timely than it was a week ago or 2 weeks ago to start being more cautious. And I'm going to be taking this into account, especially with the night trader portfolio, and keeping some of the stops much tighter here on this round, because the next step down is going to be one of those where you have to get defensive again, just like you did in February and you did in March. And the market could see another acceleration just like it did. Not as dramatic, not where we're falling 10% day after day, but certainly 2 and 3 and 4%, and then maybe an up or down day. So we've been going 2 steps forward for the last 2 weeks, 3 weeks, and now in one step, tiny itty bitty step back, it gets reversed. We could look at reversing that dance here over the next week or so. Let's look at those 3 companies that I just talked about and a couple charts of them as we look at how a final kind of finish up on how you trade these. Microsoft in another position, the stock's trading up 2% before the market opens. It's going to be up above that $180 mark, which has been resistance. Look at the one somewhere around the 165 to 170 mark. There was a lot of consolidation at that 170. If you're an owner of Microsoft, this is a situation where you might want to sell some covered calls, maybe the 185s, even the 190s. Premiums are still kind of rich, not as rich as they were a couple of weeks ago, and you're not going to get as much for the 185s. You could be a little risky and go out and do the 180s, but you're going to get a called away there. The other strategy here is if you don't own the stock, this is a stock that I have already tagged for my 2021 bullish bull market portfolio, and you try to buy this at a 170 print. So you put it in a limit order at 170 and let it stick. Or if you want to sell the puts at 170, you can do that and collect the premium on those and wait until they get exercised and the stock gets handed over to you. If you want to buy it a little cheaper, 165 also, and play with that 50-day that's moving lower. So 165, 170 is a good buy point on Microsoft, in my opinion. And 185, if I were looking to cover up the stock with some calls, bring in a little premium, because I think it will trade sideways as the market starts to see a little bit of weakness. Start looking at the 185s that you can collect some premium on. Facebook, obviously, going to be strong out of the gate, closing or moving above their 200-day moving average yesterday. You're going to see this stock over the next 3 months push its way back up to the 220 mark, back up to those highs. If you weren't in it now, I think it's going to be too late to get into it, except if you want to try to play it as a speculative play and ride it up to that 220. But really, Facebook they've had such a good run here coming out of this bottom after getting absolutely beaten up. I think 220 is where you're going to see the stock see some overhead. If you own it, you could write those calls as you get closer, collect premium, or you could start with the 215s or something closer. If you don't own it and you want to own it, and I do think it's a stock worth owning it, you put the limit order in at 190, maybe even at a 180, or you sell those puts here in a day or two after the volatility drops off. So let's move on to Twitter, and this is going to be the funky one for the day. Oh, they were up 6%. Now they're down in after hours trading. Now they're down 2% after the report. Watch the stock in the 50-day moving average. This is one where a put is going to start to make a little more sense if the NASDAQ 100 gets weak here over the next few days. You're not overbought on Twitter yet. So in terms of a trade idea, this is a limited upside trade. Go up to the 35 if you wanted to try to trade it, or the 34. I think with the stock trading down in pre-market, though, you're really going to see it start to, it really hasn't participated, and that's why it's not overbought. It hasn't participated in the same rally that the NASDAQ 100 has over the last couple of weeks. So I think you're going to see Twitter slip right down below that 50-day moving average. And at that point, it's going to be a shot down to 25. It's the one out of the three that right now I look at and sound a little bit bearish on. So a little bit bearish, and not necessarily something that you go out and grip and rip and just let it go and expect that it's going to go down to that 23 level. But I think that the stock is going to meander its way down there over time here. So trading the market this week, bump day was in effect yesterday in a big way, with the markets closing over 2.5% higher. Apple and Amazon will close out the showcase earnings week tonight. Again, look for Apple to kind of be an in-between here. It's going to be a wrestling match between the software and the services side. Amazon, expect them to come out, and actually you're going to see Amazon, a lot of talk about Azure, especially since Microsoft, I'm sorry, not Azure, but the AWS, especially since Azure was such a big point on the Microsoft call. And obviously with people working from home and a lot of data floating around out there, Azure, which has been Amazon's real leverage. It's been the huge lever out there for the price here. I think that's going to give you some positive news, as well as an obvious bump in their retail activity. Their expenses are going to be a little bit higher, so it wouldn't be unbeknownst or a complete surprise to see Amazon maybe come in tighter on that earnings per share number. Their revenue number's going to beat the number, but look for the outlook. Look at what they're saying. I think they may actually have a continuation of the outlook into 2020, which would be rare. It feels like these companies have been the shiny objects of the market. It really does this last week. And for that reason, we need to focus on what's coming up, what's not sexy here. And those are the insurance companies, the materials companies, utilities that are going to right now pave the way for next week's trade. Today's close above the S&P 500 and yesterday's, close above the SPY and the IWM. The second, that's a bullish catalyst, and I cannot deny it. We have to see it pull back if you're going to start adding long puts to the portfolio. I am right now itching to add some to it, because I think everybody out there knows my outlook includes another test of that March bottom. I think that the Fed and a few other things, this fantastic earnings season has gotten us over that hump. But watch with that 50-day on the SPY and especially on the IWM. It broke through it like a bat out of hell over the last 2 days, and it tells you that the risk on trade is coming back in vogue, or at least to some degree. And when you saw yesterday interest rates going up right now, so you've got people coming out of bonds, and that's after the Fed came out and said, hey, we're going to put everything we've got into this thing. You've got now an IWM that gets fueled 5% instead of 2.5% by the rest of the market. Watch the IWM over the next few days, and I'll watch it for you, but watch the IWM with this overbought situation. If we start to see that snap back down lower again, it's going to be time to start adding a little defense. Start putting I'm going to have to put some stop losses on some of my positions so that I can hold them back and not let them balloon up to what they did on the put side when this market was rallying. So that's something that I'm going to be very attentive to. We talked about yesterday. Tighten up your holdings as the weekend approaches and this market becomes overbought. Again, more than 70% of the S&P 500 companies have hit the oversold or overbought bell. I've jumbled up a little bit here right now. They've hit that overbought bell. That never comes without a consequence at some point. Overbought can continue to become overbought. That's something that Andy, my mentor, told me. The same as oversold can become more oversold. But at some point, we'll see a leveling off of that. And that's the point where you start to get more defensive with a market like this that we know has the possibility to take us much, much lower again. So you want to tighten up and put stop losses if you've got positions that you want to not risk going down through maybe a week of selling next week or a weaker week. you want to think about putting some stop losses on those positions. I'm taking my own advice here on this one. So with that, I want to go ahead and look at some of the questions here. I've been doing my best to not focus, not look at the look at what we're doing. I'm up to the good mornings, and I'm going to scroll through. If you'd like to have me look at a stock ticker or a question, please throw it up there right now. I'm going to be going through and actually answering some of these. I'm going through the technology right now. We're talking about a lot of stuff. Anyone looking at long put options yet? Paul, I think that, as I said, with this many stocks being overbought right now and the headline week for earnings going away, I think it's probably one of these things to consider a couple of well-positioned puts here, a couple of well-positioned. Don't get too early. I was too early 2 weeks ago. So don't get too early, but this is much more appropriate in terms of timing. GM, what do I think of? Let me pull up the price chart of GM. GM, obviously, and Ford getting squashed here. GM 2378, resistance at that 50-day. Let me adjust the screen for you real quickly here so you can see that better. And let's zoom in on the time period right now. I think GM, obviously, you've got some companies that are in more trouble than others. Ford coming out with some just terrible news, and you saw, obviously, the stock pulling back from its 50-day. Let's watch GM as it's playing with its 50-day right now. I wouldn't be going long GM right now, especially as the rest of the market's been overbought. This stock, you'll notice, has a tendency to be trading in the middle of the range of everything. So GM is right now a neutral stock. It's not a buy. It's not a short. A break below the 20-day is going to get an increase in volatility to the downside, a little more aggressive move. One chart I wanted to show you, and this is a sign of the times. Yesterday, when Carnival Cruise Line goes up 15% or 16%, this is one of those wow kind of moments. I mean, it is literally typically, did they announce overnight that they're going to start sailing their ships? And if they did, how much money are they going to be giving the people that are going to be getting on them? Because that's what it's going to take to actually get the business going again. Bruce, June options really is what I'm starting to look at. I want a little more time value. Time decay can start to take place pretty quickly when you're buying the front month. Go back 1 month when you're looking at options right now with that Microsoft and the Facebook scenarios that I was talking about. I think those are June type of option plays. Will Zoom recover is what is asked by Sarah. By recover, I assume that you're talking about, is it going to go back up to 180? It's coming down to test its 20-day right now. The stock, obviously a great buy. We talked about Zoom yesterday. I don't think it's a terrible buy at 140. If I want to get greedy and wait a little while, it's 130. The bounce off of the 50-day moving average, obviously showing you some strength for Zoom. I think their announcement that they're going to partner with Oracle was a wise one when you've got, obviously, Microsoft that is trying to get their product, their own product that is similar off the launching pad here. And it's really, Teams hasn't gone off as well as they thought it would. I think Oracle is going to be an interesting product for Zoom, or interesting partner for Zoom. And yes, I do think that you're going to see it back up at that 180 level. I am still bullish on Zoom. Kevin's asking about Gilead. Everybody's questioning Gilead. We see reports that come out early in the morning yesterday. Dr. Fauci on Good Morning America. Actually, I have a friend that works at the NIH that told me how nice Dr. Fauci is. And they have a nickname for him that I really don't think it's cute. It has to do with his stature and the fact that he's a very kind Italian person, very spirited and kind Italian person. What an amazing person I think we've got up leading this up. But anyhow, he was on Good Morning America, I believe it was yesterday, talking about remdesivir. And one of the things that everybody pointed out real quickly was the fact that the study was on 1,100 people, and the FDA is pushing for this to get fast-tracked right now to approval because they believe that it is helping. I think it shortened the hospital stay or the hospital recovery from 14 or 15 days down to 11. And then the mortality rate came down by a couple of percent. A few people are saying that this is the problem with the stock like Gilead, and I'll give you my recommendation in a second on or what I think. This is a problem with it. When it's such a highlighted stock like this and studies are coming out, it's going to get pulled apart every which way that it can, which is good and bad. The stock rallied, then pulled back, then rallied yesterday. 84 has clearly been a top for Gilead. When we got to 85 here, I said, hey, hold off on it because we had this bump back in early March that was kind of the same situation. Gilead has this miracle drug that they think is going to fix it. Here's the testing. Now we get announcements. 84 is going to give way. Remember that they're telling you that they're not going to make a lot of money off of this because it's more of a humanitarian effort. So this does more to put Gilead on the screen. It wasn't in bad shape before then. At the same time, I wouldn't be going and hitching up my entire portfolio to Gilead. I think you'll see a run that'll take it up towards 90 if they do actually get approval of this drug and they start using it and it shows effectiveness. But again, it's not going to be a huge. And Johnson & Johnson made the same point when they came out with their first drug that was showing some confidence there. They said this is not going to be a huge game changer in terms of our top or bottom lines here. So don't expect them to, Gilead to really lead. It's going to have these firecracker moments, but they're going to go out relatively quickly. Let's see here. DLR. I want to make sure I got a few of these from up above. We got Zoom. We've got Gilead here. We've got, there are a bunch of them up on top here. FLIR. Let's look at FLIR. So there's FLIR Systems, something we looked at yesterday. 50-day, obviously, the nice break. 2 days above it, that's a close above. The pullback and then bounce right back above is a strong move off the 50-day. 200-day is going to be the resistance level. Call it $50 on FLIR right now, Ron. I think, and you just, the short on FLIR, it is overbought right now. It's got some momentum. I think this will be one, and you'll probably get a little bit of a pullback today with the rest of the market. It could make its way up to that 200-day moving average. And the technicals, say that, hey, that's where everything's going to stop, where the music will stop for it. I think that you're safe with the short. I'm not sure what expiration you bought. If you bought into the June or the Julys, I think that's probably a good move. FLIR will come back down to that. Right here is where it's going to land, right at that 37.25 zone is where it's going to find support after it pulls back. PAYC, I put an extra O in there, AYC. We've got Paycom, which blew up yesterday above the 200-day, above the 50-day. Here's a little hint for you. If a stock breaks above its 50 and 200-day in the same day or in one day after the other, typically it rallies for the next 5 days. That's just a quantitative. When I go back and look at all my studies, that is one that I've studied because I studied the 50-day and the 200-day a lot. Right now, the stock is reaching up into overbought territory. If you owned it before it made this break, I'd say you put in a trailing stop somewhere below it. It's an expensive stock. 280 is going to be somewhere where it's going to start to slow down because of you see the support that you had here, and then we finally broke down. So I'd say 280 is where I'd be looking at it over the near term. And I think this market could put more of a lid on it than actually that 5 days that I normally see a stock run for. So in other words, if you want to put a stop on something, if you owned it, if you're up, and I'm seeing somebody ask about this, Matthew Shane. Matthew, if you're putting a position in and you're up 10%, maybe you put a 5% stop in. If it's a volatile market, you lock in a 5% gain. But if you extend it out a little further and you go up 20%, I ratchet them up to 3% or 2% and let them ride from there. And I don't change them at all after that. If it goes up to 50%, I'll still have a 2% trailer in. And if it gets shut out, I got 48%. If it immediately gets shut out, I get 18% at that 20%. So that's how I use those trailing stops. And those are on equities. It's very hard to use trailing stop on options before anybody asks. Qualcomm, another one that's not been leading in the semiconductor sector, but is above the 50-day. You're getting ready to see the 20 cross above the 50-day as well. It's getting ready to be overbought. The word I put on Qualcomm is hold off for a better price. 72.50 is where you're going to be able to buy it. The oversold along with the 200-day, overbought along with the 200-day moving average, likely to push you back down to that 72.5. And assuming that the market's not slipping down a slope of hope here at that point, and we're seeing something similar to what we saw in February and March, 72 is where you want to purchase it. If we do slip into a February, March situation, you want your limit orders somewhere around $65 is a good one for the group here. I think 65 bucks on Qualcomm. This will be not necessarily a strongest in the group here, as you see with NVIDIA. NVIDIA is not going to change. NVIDIA is just going to be the leader of the semiconductors. We'll call it the semi-king for now, in with some sort of respect to the Tiger King. Zachary's asking about 3 DLR, Digital Realty. Right now, you can see the chart, big pullback yesterday. We had interest rates go higher yesterday. 148 has been a consolidation area for the stock. Still bullish on this name, but not going to let a loser go too quickly to the downside on us. Barrick Gold, the same type of situation in terms of the loss control. You know what? When the Fed comes out and says that they've got everything and they're going to throw it at the market, you expect to see the gold companies start to rally a little bit. Let me see if it'll allow me to pull up the 5-minute chart real quickly on Barrick Gold. But when Jerome Powell made that comment yesterday and said, "Hey, we're going to make every effort to bolster this market," that was right around in here during the press conference. So Barrick Gold went from 26 bucks even up to 26.60 on that comment alone. Basically, I'm expecting a little more of that activity today as everybody's realizing the Fed really is a backdrop for this market. Go back to a daily here. I'm going to take 3 more. U.S. Steel, X. I haven't seen anybody asking about steel here lately. A hard business, tough business that's actually fine. The materials have been finding a bit of a trend here right now. I think this sector actually is the materials that could lead us a little bit higher, even though most of these companies are going to suffer from lower demand because production is going to slow down, and that includes the steel companies. One interesting area of the market, I bring this off as a side shoot with materials, are packaging companies. Packaging companies that make corrugated cardboard and boxes and things like that are starting to take off again, and it's all because we think we're going to see a lot more shipments coming back from China here over the next couple of months as everything gets back on board. Take a look at some of those packaging companies. U.S. Steel, I like the chart here. Let me look at one thing here real quickly, though, for you, and that will be if I can get to it fast enough. Let's look at the summaries and X. And the analyst on it, going to be very bearish. Yep. And they're not going to change their pace right now. 33% sells, 67% holds. Let's look at the short interest ratio. Like the short interest ratio, you see it was a little bit higher there in August, September of last year. We've seen increases. That means this break above the 50-day and the 200-day. Some of this is going to be short covering, and we saw some increase in the volume here. Look at 9 to 10 bucks as a top for U.S. Steel here, and I think the market will actually start to slow it down at the same point. Etsy, love Etsy as that stay-at-home type of stock. I mean, it really has. It is one of those that we used in that I actually recommended as one of my fast profits weeks and weeks ago, and I'm not sure why we're losing the connection on the e-signal here. But let's just go to the other. Up there comes. Nope. Give me a second, and I'll just go here and put it in. We'll switch over ETSY. And let me make that chart a little bit higher, a little larger for you. So Etsy, obviously some resistance at the $70, $65 also going to be some support. If it flips below $65, $60 is a place to be buying Etsy right now. Looking at the short interest and the short interest ratio, there was a short covering that took place between January and February that helped to drive the price higher. Analysts have been getting bullish on this stock. I'm not afraid of them being too bullish at this point, but I do like the fact that they've been engaged. But to look back at that price, I think right now Etsy's got in. You can see that it was overbought and continued to rally higher. It just now finally started to come out of that overbought cycle, and I think that Etsy's probably going to test itself at 65, and you'll see a rally from there. Let's see if it's going to let me pull up Chewy. I'm not sure what went wonky with my e-signal here, but here comes Chewy. Another situation of consolidation across 44. This is a $60 stock, in my opinion, in a couple of months. Chewy's going to continue to push forward. Again, they are one of the reasons, another reason I don't leave the house during the social lockdown, but at the same time, one of the reasons that I will still continue to make my life easier by getting that box. Real quickly, that's going to be it for the charts, but I've got to go through this from Bob. Can you give me your thoughts on oil stocks, SDS, XOM? Oil has seen a magnificent bounce from that oversold reading. When we look at the USO, and somebody said what happened with USO, it's now trading at 18 bucks or 16 bucks. That's because of that 8-for-1 reverse split that we saw yesterday that was taken into effect. USO, the trend is not changing right now. Brent crude and WTI futures are moving higher. USO is disconnected. That will come back into play at some point here. But when you look at the energy stocks, and we've seen them this week come out with some earnings that were not bad, especially given the fact that oil has kind of crushed them, or at least started to apply a pressure to them. ExxonMobil right now breaking above its April highs has to be looked at in a bullish manner. I think it sees a pullback down to 44 before it gets rolling again. So give oil a rest from this just crazy, absolutely crazy rally that we've seen. Give oil a rest before you jump into it. It's almost like Tesla right now. I would not be a buyer of Tesla, and it's not because I don't like, and look, they're talking about Elon Musk right now on the television. It's not because I don't like Tesla's plan. It's not like because I don't like their product. Their product is a computer on wheels, which everybody should like. He's been doing very well. Obviously, executions come back up, but I wouldn't be buying the stock at this point. I'd be waiting for a pullback. A lot of people have been long the stock, and we're going to see some profit taken when it reaches that high again, when it hits that double high. So on these stocks, don't go fishing on them if they're way, way, way overpriced right now. My advice to you over the next 2 days, and I'll reiterate this tomorrow, watch those overbought signals from individual stocks and from the ETFs, because as we roll into the weekend, I think you could see a little bit of a slowdown, a little bit of a pullback. We saw lighter volume 2 weeks ago when nobody wanted to commit. All of a sudden, everybody's committed. But that fear of holding too long, the same reason they didn't want to commit, will get them selling out of the market relatively early. We've gone way beyond our time, so I'm going to go ahead and close things up today. I hope you have a great trading day. I look forward to seeing my night trader people at 11 o'clock. We're going to talk about the positions. We're going to talk about some stop losses that are going in and a few other things, as well as your charts and your questions. Until then, market just opened because everything to my left started flashing on the screen. So I hope I got you a little bit ready for the trading day. I'll be here to answer some more questions tomorrow. Hope you have a great day. Best of trading luck to you.